going on, guys? Terry James, your mortgage guy, coming to you. Once again, got my buddy Edwin Alvarado here, local realtor. And so today, what we want to talk about is there's a lot of things going on. What do you do after you get your offer accepted? And it's really important because some of that process gets lost. Clients can tend to drop the ball sometimes, and they don't really know. And some people don't even know what the process is. Yeah. So let's start with from your side. So from the realtor side, you get your offer accepted. Yay!
Yeah, we get excited. So we have our offer accepted,
Right.
And now, like we do, we send the contract, full ratified contract, to the lender, and then we notify the client. Okay, your offer has been accepted. Now you gotta make sure you update your pay stub, bank statements,
Mm-hmm.
and everything that the lender needs to process the loan. You know.
Now, as far as one of the things I had, because this was a recent deal a while ago, is that the client had their offer accepted and wasn't aware of the EMD, the earnest money deposit.
Yeah.
And so, what's the process on that? Do they have so many days to get that in? What does that look like?
Yeah. So before we get to that point, we educate the client what the process of once your offer is accepted. The EMD is the initial deposit when you make an offer, and that you have 3 days. Once your offer gets accepted, you got 3 days to put that into the title company. Make sure the check is made out to the title company, not the lender, not the realtor. You know.
Now, the thing is that that's really important because I know that there definitely have been some situations where the money a check was issued to the realtor, and let's say they never got it in. What happens?
So within 3 days, if you don't get your deposit in, then you might get a notice to perform from the listing agent. So when that happens, you have 48 hours to put your deposit in. If you don't, they have the right to cancel that contract, and you're out of luck. You're not gonna get that home. So make sure you follow the timeline
and get it into the title company. Never write the check to the agent. Yeah. Never write the check to the lender. You write the check to the title company.
Yeah.
So once you've done that, you have the offer, you get your earnest money deposit in. What takes place after that?
So once deposit into the title company, we have that time frame where we do inspections. So we have like 15, 17 days to do the inspections, loan contingency, which is the loan application and loan process.
Yes.
Approved,
Yeah, so the loan contingency, so the inspections we talked about on another video. Make sure you check it out, talking about inspections. But the loan contingency, so what that means on the lender side is, or what that means in the loan process, is you have to have a loan approval. So after so many days, that loan contingency, you have to have that final approval, essentially.
Oh, okay.
So what happens if, as a lender, have you ever came in, and I'm sure you have, when you don't have that from the lender yet? When you don't have, what does that look like?
That's like a red flag right there, when you're not getting a final approval from the lender, we have to go through underwriting. And if you don't have that, you're kind of a red flag kind of issues, and.
Now, what are some of I know that as a lender, one of the things that can cause us issues with getting a final approval is if people are switching in the loan process.
Yeah, I really recommend, once you talk to a lender, you're pre-approved, you should stay in contract with the same lender. It's going to come out more issues if you start switching or looking for another lender. You should have done that way before you even contacted the first lender, So
I always tell people the most important part of the home buying process is to prepare.
Yeah.
So that means that you prepare and you vet. I've talked about it several times. It's important that you vet your lender before you get in contract. Yeah. You vet your realtor before you get in contract. Because once you get in contract, once you start moving either one of those pieces,
Yeah.
things will slow down. You
Yeah.
know, because I know from the lending side, when, for instance, when we get a transaction that's been switched over from another lender, we're getting it, and now we may only have 5-10 days
Yeah.
to perform.
Yeah. These loans are being closed within 15, 21 days.
Right.
I haven't seen any 30-day escrows anymore.
Oh, I haven't seen that.
No, so that's what I mean. You guys stick to the lender you're working with, and unless you have some kind of major issue with that lender, then you have to go, and then we have to verbalize and communicate that with the other side, which is the listing agent.
So anytime, and let's talk about that, because in that process, if you do switch, since we're talking about what not to do, switching lenders, realtors, either way, if you switch a lender, you do have to, on your side, do you have to notify the
Yeah, we
listing
have
agent?
to notify them in writing that we're switching a lender,
Mm.
and then they could reject your offer right then.
Really?
Yeah, they don't have to accept it.
Interesting.
You know?
Now, have you seen that to where the listing agent, or even if you've been on the listing side,
Yeah.
I'm sure you have, and they say they got a new lender, what's your feeling on that?
So when that happens, I have to get my own lender involved to see if we can pre-approve them underwriting approval. Because we don't know this lender comes out from the city or different area, and we can't assume it's going to be a good loan if the other one wasn't able to do something.
Exactly.
You know.
And so, as a buyer, and you start switching, the concern becomes is you might lose that deal essentially.
Yeah.
Now, when you say that you have the option, which I didn't know, so as a listing agent, if they switch lenders, you have the option to say no deal.
No deal unless you go with my lender or we're done.
Wow.
We can kick that out.
I didn't know that.
Yeah.
So you can reject offer when
Yeah.
that happens.
And remember, there's that backup offer as well sometimes on these homes. So you not proceeding in your loan, they can switch up to the backup offer.
Because it brings up questions.
Yeah.
Okay.
You know.
So definitely take note of that. And now, as we go through the process, we have our loan approval, we have the inspections done. What takes place at that point?
So with the 17 days, the loan, the appraisal, inspections. So if we find something on inspection, we have to request that within 17 days. If we don't, we can proceed, remove all contingencies, and everything's on the hands of the lender to finalize the final approval.
To get approval, right.
Yeah.
So then from that point, what we do is, by the time you basically get in, accepted offer, what happens is we now send that purchase contract, we get the appraisal ordered, and at that point, everything should be going to underwriting for final approval. You cannot get final approval on a loan, of course, until we have the appraisal in. And so even though all your documents have been reviewed, everything's done, we still have to get that appraisal.
Yeah.
Which
Yeah, the appraisal needs to come in at the purchase price that you offer. If it comes below, we have to come out to the table and renegotiate with the seller to see if we can come out to an agreement on that different price.
And if it comes in higher, do you have to do that?
No, like when it comes higher, good for you.
Right.
But the seller does not need to know that. I've seen things like, oh, okay, it appraised for 20,000 over, and the seller didn't know about it. But that's gonna be good for you.
Yeah, so that's one thing that, and I get this often when it happens, is the listing agent, they're just doing their job. They'll ask for the appraisal. And so as a lender, we're not able to actually share that with the listing agent.
Yeah.
We can only share it with our buyer and then with the buyer's agent. So when you get equity, let's say it comes in higher, the listing agent is not even aware of it. Unless you disclose it.
Yes, it's recommended if the buyer's paying for it, they can disclose that if they want to or tell me. But I would not, I would not disclose that.
Now, when it comes in, let's say the appraisal, because in this market, we're kind of seeing that. It's not often, but we are seeing some lower appraisals at this time. when that happens, what's the negotiation process? Does that mean, let's say it comes in 20,000 lower?
Yeah.
Do I automatically have to come as a buyer? Do I have to come out of pocket now?
Yeah. Well, yeah. Unless you put it in contract saying that you're gonna pay the difference on the appraisal, then you're liable for that. Otherwise, we have to negotiate with the seller. If we can't come to an agreement, then we have to go back to the lender and see if we can modify or revise the appraisal.
Okay. Now, if when it comes in lower, am I able to cancel the loan? How does that work?
Yeah, so you have not removed the appraisal contingency, so you can, if we can't come to an agreement, you can cancel the agreement, the purchase contract, and you're allowed to even get your deposit back.
as long as you do it before the appraisal
Contingency.
contingency date.
Yeah.
Okay, perfect. And we're definitely going to be talking about contingency dates because as a buyer, these dates are very important, and it's important that you understand what the contingency dates are and what they mean.
Yeah.
And I'm sure that just because I've been working with you for so long, I know you explain that to your clients. But there's a lot of realtors who aren't explaining contingency dates to the customers. Why is that important for you? Why do you explain it to them?
So the most important is to protect you and your funds, like your deposit, you know, because otherwise there's a lot of realtors not explaining that, and a lot of clients are getting upset losing deposits, and we're not here to lose deposits.
Right.
You know, we're here to make homes, dream homes for you guys.
Okay. And so, pretty much, as we're going through the process, you have the accepted offer, you've gotten loan approval, your appraisal is in, and we say, hey, the appraisal came in at value. Now, what takes place for you? Because, as a lender, we get the appraisal in, we say, hey, the appraisal's in at value. What happens now?
So, next is, we could get closer to a final walkthrough, which means we go to the home and check out everything that it's comfortable with you since the first time that you looked at the home. So then now it comes to the lender. When can we get the CD, which is
the closing disclosure? Now, when you say that you have your walkthrough, so after the appraisal, you have your walkthrough.
Yeah.
If there's something that pops up, or there's been something changed, altered, taken away on the property, what happens then?
So we have to negotiate with the listing agent. Okay, you guys took the stove. It's in the contract. You took the curtains. We have to talk to the listing agent and said, this is happening, and we're not signing nothing until we get these things back into the property.
And you do the walkthrough right after the appraisal is done?
Usually, once the CD comes out,
okay,
then we do a walkthrough before you do the final signing at the title company, or they come to your home.
Okay, and then just to touch on what the CD is, so it's your closing disclosure. So after you have your final loan approval, you're going to be issued a closing disclosure from your lender. That is going to go over the final numbers of what, number one, the most important thing is what you're going to bring at closing. So it's going to go over your rate, it's going to go over your payment, it's going to go over all the fees, title fees, which are title escrow fees. It's going to go over your down payment, closing costs. All this is going to be in your closing disclosure. What happens then is that 3 days later, there's a time period on it before you can sign your actual, with the title company, your loan docs. So once that CD goes out, if you do it electronically, that typically speeds up your time. But then from there, you are now able to now get your final documents out at title, which you can sign. And so on your closing disclosure, the most important things I always say to look for is, number one, you want to make sure your rate hasn't changed. So whatever you agreed on at the beginning, you want to make sure your rate is still the same. You want to make sure your payments are the same as what you initially agreed. And then you want to look at your cash to close. So that's going to go over if you've gotten any seller credits.
Yeah.
That will be on the closing disclosure. And then if you've gotten any seller credits, that'll be on the closing disclosure. And then if you have any other lender credits will be on there. So that's going to be your final thing. Once you have that, the docs are going to be issued to title.
Yeah.
And then from there, that's where you would sit down with the agent. And then you would sit down with the clients and title company.
Yeah.
And do your signing.
Yeah. Just go over the documents, make sure you're comfortable with everything that the lender has said. You know, if there are any issues, we have to go back to the lender. It's going to be a redraw.
Yes.
You
If
know?
the docs are not right, if there's an issue on them, anything like that. Now, the one thing that you do want to do is you want to look at when the docs are in title, what's going to happen is that you also want to make sure you get your cash to close. This is very important. Your cash to close needs to be into title before you sign.
Yeah.
I recommend you get that in. I say 48 hours if you can.
Yeah.
Before you sign your documents. Matter of fact, once you get the CD,
Yeah.
I recommend to get your cash to close into the title company. The best way to do it is a wire. So, you can bring a cashier's check, which is fine, but usually you want to wire the funds into escrow. Once again, you don't want to give it to the realtor. You don't want to wire the funds to a bank account. You want to wire the funds directly into the escrow, so when you sign, everything's ready to go.
Yeah. Yeah.
And so that's pretty much what happens after you receive your accepted offer. That's pretty much the process.
Yeah.
Anything else on there that you would kind of
It
walk
usually
through?
takes about 2 days to record, right?
Yeah. Typically, depending on when you sign,
Yeah.
what county you're in,
Yeah.
counties have different time. But if you sign, let's say you sign 10 a.m., some counties have 2 recording periods.
Yeah.
So you could possibly record same day or the next day. Now, why is the recording important? Can you get your keys before that?
No, I recommend not getting you the keys because there's a lot of things that happened before something that came up. You decide to buy a car, decide to buy furniture before we record it. And the lender always checks, make sure that nothing has been purchased.
Right, there's no new items, nothing
Yeah.
on credit.
Yeah.
And so once you record, that's when you're able to get the keys and walk into your new home.
Yeah. That's when we give you the keys.
All right, so that's pretty much the process in a nutshell once you receive your accepted offer. And then always, again, the most important part of this, to make a smooth transaction and to make it smooth for you, the realtor you work with, the lender you work with is absolutely important. And if you're in the area, you definitely want to give us a call to make sure your process is going to be smooth. And like I said, vet your realtor, vet your lender before you even make an offer. So that once you start, you're on the right path and everything goes smooth for you. All right?
Yeah.
All right, well, until next time, you guys, take care. Definitely, I'll put up the links as far as what area we cover, and definitely contact us. Until next time, take care.